Robert Stern will have more on where the Hang Seng Index is headed from here. And Japan's Ministry of Finance has announced that the level of bad debts in the banking sector has tripled. We'll go on the line to Tokyo to get an outlook on how the market is reacting to the news. And for our guest host today, we have Philip Chan. Philip is the head of research at Shenwan Wongo Securities in Hong Kong. Philip, good morning and welcome back to the show.
Nice
well, another auspicious day on Monday. Yeah. The market dropped 8.7%.
That's right.
Do you see it dropping by the same percentage again in today's trading?
Not by the same percentage, but there's still probably some more volatility, in the short term. But I do expect it to pan out very soon.
How soon before the market discounts this whole Peregrine fallout?
Well, the Peregrine aspect is only part of it. I mean, there's other aspects as well.
High interest rates.
High interest rates, and also worries about the how resilient the Chinese economy is going to be in future. But I think in terms of like the other thing is obviously the dollar peg. But in terms of the dollar peg, I think I don't think that's going to change at all, right, in the near term.
We'll get into the dollar peg in a little while. Let's take a look first at Peregrine. It will be looked over by liquidators. After that, what happens next?
Well, normally, you see, it's like with any collapse of a bank. I mean, liquidators look at it, and then they will see, what could be salvaged from the company, what could be sold off if anything, because it's hard at this moment, and nothing's been released publicly about what.
But taking a look at the company, can anything still be salvaged?
There may be some portfolios of shares or other thing, maybe certain securities that could be sold off.
Some analysts are saying they have a huge China book, and if sold before the collapse or even during the collapse, it could have been worse for the stock market.
No, I think that if they're going to sell off China shares, if they have got any China shares on their books, I don't think they're going to be so. I don't think that the portfolio is so large that it's going to severely affect the China markets. I mean, the China markets are already jittery on other factors. Even if there was a sell-off of stocks, from a portfolio, it would only have a temporary effect.
What do you think will happen to their overseas operations? A lot of analysts are saying they could still be saved.
It's possible, yeah. It depends on exactly how much is owned, right? Because not all of them are 100% owned. They could be sold off. It's possible. I mean, it depends on how the liquidators, come to negotiate with the creditors. That's what the job of Price Waterhouse is going to be.
They've been in existence for the past 9 years.
Yeah.
What have they done right and what have they done wrong? Well, everyone knows what they've done wrong, but what have they done right?
No, they've been. I think they've created. They're not the only company which have listed red chip stocks, but I mean they've sort of built that sort of niche for themselves. A lot of the major red chip companies, existing ones and new ones, have sort of listed or placed stock through them.
But they really dug themselves a deep hole with this unsecured loan to Steady Safe, an Indonesian company.
Sure. I mean, there's most financial. It's happened before with other financial institutions. The one major mistake, and that can sort of finish the company. It's going to happen again. It's happened before. It's going to happen again.
All right, Philip, we'll have to leave it there for now. We'll continue our discussion on the Hong Kong stock market in just a moment. But first, here are some of the stories we'll be watching for you this morning. Hong Kong stock